As promised, let's now shift the focus to the commodity markets. We have Manisha joining in with the latest. Manisha, good morning. So what did the weekend bring?
Well, profit taking in metals. So you have gold prices down almost 6% off from its all-time highs, and the metal prices are down by a percentage point in the Asian markets right now. But what seems to be doing better really is the crude oil prices. After that very sharp decline that we saw on Friday when the prices fell by 2%, we have seen some bit of a opportunity buying coming into the markets. Well, the reason for that is that you have China and Politburo meeting over the weekend vow on stabilized jobs and unemployment insurance funds as well. There also is more conversation continuing, and in retaliation or on reaction to the tariffs, there is an expectation that China would be looking to increase consumption, and we could be looking at some more measures coming in. And then there is an explosion on the weekend at Iran's Bandar Abbas port on Sunday, and that has also added some premium to the prices. Markets also are seeing some support on the back of uncertainty in sense of trade talks in US and China, with an expectation that you could be looking at a step back from both of those countries coming in. US already has said that there are conversations going in, and there have been reports on how US has softened the rhetoric and China has exempted some US imports from 125% tariffs. But that's exactly where the bullish cues for the crude oil prices end. Because come the month of May, you will have OPEC and allies increasing supplies by 411,000 barrels per day. And the expectation is that you could be looking at more barrels being added from the month of June as well. Also, when you look at various statements, we do understand that there is some kind of a disagreement with various OPEC and allies members, Kazakhstan and Iraq especially, saying that they will be adding more barrels. So this disagreement also poses a downside risk when it comes to the crude oil prices. The US dollar index has strengthened. It's off its 3-year highs. You also have US-Iran reporting signing of progress in nuclear talks in this week itself. So those are some of the factors which have led to premium going off in sense of crude oil prices. IMF cutting US growth by to 1.8%, recession odds being added to 40% are some of the other factors also. So when you look at the prices, while we may be 1.5% up on a weekly basis, but in this year until now, we are down by 12% for the crude oil prices. And when you look at the last 12 months, we are down 24% in sense of crude prices. But this is going to be an important week because you have so much data coming every day of this week. Monday, that's today, you have Canadian federal elections. Tuesday, you have consumer confidence numbers coming in. If you look at Wednesday, you have first quarter GDP numbers, employment numbers, pending home sales, and Bank of Japan monetary policy meeting. That's also on Wednesday. Thursday is US weekly jobless claims, and on Friday, you have US non-farm payroll data. So as I said, every single day there is data coming in from the global markets, and that would set course ahead.
All right. Thank you very much. Commodities there in focus, Manisha. Appreciate it.